SME stands for small and medium enterprises. These are typically smaller companies that are looking to raise funds from the public to expand their business operations. An initial public offering, IPO, is a process through which a company offers its shares to the public for the first time. An SME IPO, also known as an SME public issue, is specifically designed for small and medium-sized companies to raise capital from the public. The main objective of an SME IPO is to provide these companies with access to the capital markets and enable them to raise funds for growth and expansion. The process of an SME IPO involves several steps. Eligibility: the company must meet certain eligibility criteria set by the stock exchange where it intends to list. These criteria may include factors like profitability, net worth, track record, and minimum capital requirements. Drafting the prospectus: the company prepares a document called the prospectus, which contains important information about the company, its business, financials, and the purpose for which it intends to raise funds. The prospectus is submitted to the regulatory authorities and the stock exchange for approval. Appointment of intermediaries: the company appoints various intermediaries such as merchant bankers, lawyers, auditors, and underwriters who assist in the IPO process. They help the company comply with regulatory requirements, conduct due diligence, and manage the IPO process. Price determination: the company and its merchant bankers determine the price at which the shares will be offered to the public. This is usually done through a process called book building, where investors bid for the shares at different prices. The final offer price is determined based on the demand and supply of shares. Offer period: the company announces the IPO and opens a subscription period during which investors can apply for shares. The offer period typically lasts for a few days. Allotment and listing: after the offer period closes, the company and its intermediaries allocate shares to investors based on the subscription received. Once the shares are allotted, the company's shares are listed on the stock exchange, and they become tradable. Post-listing compliance: after the IPO, the company is required to comply with ongoing regulatory and reporting obligations. This includes regular financial disclosures, investor communication, and adherence to corporate governance norms. SME IPOs provide an opportunity for smaller companies to access the public markets and raise capital for their expansion plans. It allows investors to participate in the growth potential of these companies and potentially earn returns through capital appreciation and dividends. It's important to note that investing in SME IPOs carries certain risks, as these companies may have limited operating history, smaller market presence, and higher volatility compared to larger, more established companies. Therefore, it's crucial for